Welcome to We Chat Divorce, hosted by Karen Chellew, Legal Liaison, and Catherine Shanahan, CDFA. Each episode, we sit down with divorce professionals and industry experts to provide insights and frank discussions about real people, real situations, and real divorce to help you achieve your best life post-divorce. This episode of We Chat Divorce is brought to you by My Divorce Solution, offering divorce financial planning so clients can secure the divorce settlement they deserve. Visit mydivorcesolution.com to request access.
Welcome back to We Chat Divorce, the #1 podcast for straight talk financial guidance before, during, and after divorce. I'm Catherine Shanahan, certified divorce financial analyst.
And I'm Karen Chellew, legal liaison and co-founder of My Divorce Solution. Around here, we believe clarity is power, and we don't sugarcoat the numbers or the facts.
In today's Divorce Explored episode, we'd like to dig into 3 costly mistakes that we've seen lately. Cases where assumptions, shortcuts, and lack of verification turned into what could have been a fair settlement into long-term regrets.
Here's the reality. Courts and attorneys, clients, and mediators don't always get it right, and well-intentioned advice can oftentimes do more harm than good. So today we're unpacking how honesty policies, misunderstood income calculations, and cashing out retirement accounts can blow holes in your financial foundation.
Okay, Karen, let's start with what I just heard this week, because I'm really still shocked about it. You know, I'm on with the client and the attorney and another coach, and the attorney referenced that their first mediation, they went to that mediation using the honesty policy. And I was like, what? What is
Never heard of an honesty policy.
The honesty policy? I guess that's like when trust replaces the proof, basically. Just suggesting to adopt that is okay, I guess, assuming everyone's being honest. But I don't know what spouse thinks their spouse is being honest about finances when it comes to divorce. But I'm okay working with a spreadsheet as long as we have the supporting documentation. And it just surprises me that they don't require or request documentation when it comes to mediation.
Well, the additional factor there is I could be honest from my specific knowledge about an asset that could be 100% wrong, right?
That's really true.
That is so important. That's why it's so important that documentation is provided, because how many clients, I would say 99.9% of clients, even financial, advisors, planners, whoever that come through our financial portrait process, they still don't understand how that asset is interpreted in the court sector. So you can be honest all day long and completely miss the mark.
It's so true. And honesty doesn't always equate to transparency.
Yeah.
And really, to your point, if we want to give everyone the benefit of doubt, which is great to do, maybe they say they're being honest, but they don't really understand what transparency is, or they don't really understand it themselves. So they think they're being honest and they think that's transparency. But for us in our process, it always comes from verified documentation. That is your protection. It's really not your punishment, although it's painful to get all the information together, and it's nerve-wracking to ask your spouse for documentations, and it's frustrating to get it through your attorney or through the court system. But you really want to verify any data with the documentation, because you can't go back. Once you're divorced, you're divorced. You can't go back.
Yeah. And even if you negotiate what you believe is the fact and come to an agreement, a lot of times you can't go back, even if it's before the divorce. I think a lot of people think a mediated agreement can be revised. Most of the time it can, if it's signed, from our experience. So, valuation dates, are there tax impacts that need to be true up? I think that's how you refer to them. There's a lot of variables into every asset and debt that an honesty policy is just not going to cover.
I know. And on the other hand, though, I will say in our process, I say it often to our clients, let's give your spouse the opportunity to participate. Let's give them the opportunity to give us the information, even from their viewpoint. You know, like you said earlier, sometimes they don't understand it some way and they think they're being honest, but at least when we're with when we're with them having that conversation one-on-one and we actually get all that information from them, it's so worthwhile, because then you actually know what documentation to ask for, just in conversation. So there is an opportunity to let the other side provide the information to their best ability. But then it also leads you to the comfort of asking for the documentation to support it without judging somebody's honesty or not.
Yeah. And then you're negotiating from fact, not trust.
Emotion.
Yeah, or emotion's probably a better word.
Yeah.
Yeah. I mean, there's a reason people get divorced.
Yeah. Yeah. And usually trust is no longer there. But let's go on to another scenario with net proceeds not actually equaling income, or does it equal income?
Yeah, I think you had a situation again this week or last week where the attorney wanted you or wanted the client to consider net proceeds of a home as an investment where passive income would be applied and then be used as income available for support calculations.
Yeah. I mean, I just question that because it still doesn't make sense as you say that. You know, if one party is keeping the marital home and that's where they're living and they're buying out the other party, how is that buyout considered income available for a support calculation? That's an equitable distribution or a division of community property, not a support calculation. And so I asked the attorney, well, what if the client is going to buy a house? Well, they have to buy the house before we go to negotiate because it would be speculative. Well, how do they buy the house if they don't get the net proceeds? It just didn't make sense.
And you have to qualify for a mortgage. And then what about the spouse? Is that applied to his or her income available for support?
Right.
That
No,
is so convoluted.
Well, and again, it doesn't make sense because you're dividing an asset. You know, if you're getting passive income on an asset because of a home, how are you going to live in another home? So basically you're spending your asset instead of getting a support payment. So again, and I get passive income. We do this all the time. So if you have $1 million in assets and that's what you're walking away with and you have your marital home, yes, the remaining $1 million can generate a passive income for you. Yes, totally get that.
Yes.
But how do you how do you apply the buyout to the marital home when you're renting and you have to go buy another home, but you can't do it before your negotiations are over, as that being income available for support?
Yeah.
Doesn't make sense. I don't know if any of you have had that told to you. I would really like to hear it because, you know, we're in every state. And when I hear this, it just doesn't make sense to me. And I don't really hear this often. So if you've been told that, let us know, because it's something we should really further explore and dig into.
Right. Because, well, you just said it, you know, is it an asset or is it income? And those things have to be considered for sure. And you know, this is where financial modeling matters, because a lot of these things don't get on a negotiation table until, you know, if you had not been on that call with the client and her attorney or that team there, they would have, you know, walked through that process without your clarification there. And no, the client would have never known that that wasn't appropriate for her specific situation.
Right. It's really hard because I can't give legal advice, right?
Yeah.
So I am meeting with her ahead of her mediation, and I am going to role play with her how to advocate for yourself. And sometimes that's just giving really good questions to ask to make sure that everybody's on the same page with that.
Yeah, 100%. So, you know, the conclusion is what looks like available cash may leave you short tomorrow if it's misclassified, and we run into that pretty much every day.
not only every day, but with so many different assets. So let's talk about the next one, which is the cost of cashing out retirement accounts. Again, this is something that's so frustrating. When cash is tight and not available, I know tapping into that retirement plan can feel like the only way out. And everyone thinks, oh, we'll just save for our retirement later. And your attorneys think, oh, it's a great place because they'll get paid. It's rarely the smartest financial move that you can make, though.
It's tough. And, in the one case that we're specifically talking about, the advice from counsel was, well, the only place we can find cash, and she referred to it as cash, is the 401k. And so in trying to understand their perspective, which is very important for us to do here, because we all want to be advising our clients from the same space. They need their team working together. So it helps us understand, their projections there. So, I said, well, will they be truing up the financial impact if she needs to liquidate it for, cash, for cash flow or investment money, pre-retirement, things like that? And, the attorney said, well, I don't know. I guess that was the response. And, she did say, to her credit, I've not worked with a financial before. So if you want to put something together, we'll certainly advocate for that. But that could be substantial, because that retirement account, and I think it was essentially maybe the one asset on our client's side, was probably $800,000-900,000. So, what do you do with that? That would be a significant tax impact.
Mm-hmm. Yeah. Again, what looks fair is not always equitable. So it might look fair that 800,000 went on wife's column and husband got 800,000 from, let's just say, the house. But is that really equitable? And the answer is no, because you're not comparing apples to apples. That's an orange and an apple, and they have really different tax implications. And you could be short, $160,000 or more from being on your side because of the taxes that you had to pay. So you really need to understand and be clear on what the impact is and what are the considerations for your retirement monies when you get it. And believe me, I understand that, if you need to use those monies, you need to use those monies, but you need to balance them out differently when you're negotiating.
Yeah, exactly. Because $100,000 in an account is not the same as $100,000 in cash. We say that over and over, because once you factor in taxes, penalties, loss compounding, the real value can drop 20 to 30% or more. And that needs to be a part of the negotiation.
I want to throw another scenario in there, Karen, about that, because this was also a call. The attorney was talking about, oh, you're going to quadro that account and that'll cost you $1,000 or more. And, your spouse probably won't want to do that. And I'm listening. And meanwhile, I know it's an IRA, a traditional IRA, or actually it was maybe it was a Roth IRA. It doesn't matter. It was not an ERISA run plan. So I say to the attorney, well, the plan that they own, the parties own, unless you know of one that I'm not aware of, does not require a quadro. So she wouldn't need to pay that. It's a letter of instruction. You have to make sure the agreement is written up properly for a financial planner to transfer those proceeds. She's like, oh my gosh, you're so smart. I never knew that.
Yeah.
I have no words.
Yeah, I know. Well, when I worked in the law office, the attorneys would put that clause in there because they were just so unsure that, the parties will split the quadro cost, even if it wasn't applicable, just to cover, themselves. And so people pick it up and think they need a quadro because attorneys aren't sure. So, it's important that people understand that all the languaging they see in the documents isn't necessarily relevant to their marital estate. And people don't know that.
Yeah. Again, I think that's a whole nother podcast because, it's so frustrating. And, we get frustrated and we're professionals. So we just see this happening so often in every state that it's frustrating.
Yeah, it is.
All right. So let's talk about valuation dates, tax true-ups, which we already covered, and getting on the same page with your team. because the valuation dates is something from a financial that is very frustrating, right? So when you say, we're going to divide everything at date of divorce, what's happening from the date that they actually separate or decide to get divorced or file? And every state's different. So this is going to be just a bird's eye view of some of the things that we encounter. But, taking one date from the past to a date in the future, and then keeping track of everything that happens with those assets between those two dates. And one team thinks it's one team, meaning your spouse and his attorney thinks it's going to be one date, and you and your attorney think it's going to be another date. And then you're living together, you're not living together, and you're spending money on credit cards, and who's going to pay that? And yes, you hear of an advance to equitable distribution, and you also hear about reimbursement claims. But really, if you're going through the process, how are you keeping that all in your head? How are you factoring what you're doing every day, especially if you don't even have temporary support? How are we keeping track of all that?
Yeah, it was so true, because balance sheets probably are first originated maybe before, I don't know, a mediation date. Typically, documentation is incomplete at that time, or an initial hearing and temporary hearing. And so that's where things can start to come off the rails, because in my experience, many times a lot of statements aren't updated if they haven't been provided, and they can have significant impact if a year later you're actually looking at negotiating the settlement of your marital estate or community property. So it's really important that that date is clarified, and sometimes the date can be different for different assets, as we all know, but whatever it is, we need to know what that date is, and it needs to align across the board. I was working on one yesterday, and the difference between the dates, because it had been about 6 months, it was a higher net worth estate. I think because the account statements and all of the assets and debts had not been brought up to date consistently, some had, some that haven't, the net was like, I don't know, like $620,000. So that's a lot. And people don't realize mortgages are paid down, RSUs or executive compensation become more valuable. That's what was happening in this. And, we all had to reset and get clear on what the valuation, what dates we were using, so we could get a clear valuation.
And just to affirm that, is it affirm the right word? I don't even know.
That's a good word there. Yeah. Okay.
I
love to be affirmed.
Okay, good. And circle back and bring the taxes back into that. That's always another interesting aspect, because if a spouse did cash out on their RSUs, or they got granted RSUs, that's taxable in that year, right? And so if you're married filing jointly, because you're still married on 12/31, you're paying those taxes too. So you want to argue that they're marital assets if you're paying the taxes, I'm assuming, right? So that's something to consider. And also, when we talked a little earlier about truing up retirement, if a spouse is giving you a retirement account that you're using to buy a home or what have you, you can have them liquidate the retirement accounts so it's taxable to them if you're married filing separately, or if you're going to be divorced by 12/31. Let the spouse do the liquidation, so they're responsible for the taxes if you cannot true up that amount beforehand, if there's no other monies to true it up with. So there are little things that you can do to protect yourself.
For sure. So here's your Divorce Explored red flag checklist. If any professional suggests honesty policy instead of verification, that's a red flag. If someone calls sales proceeds income, a red flag. Retirement withdrawals are happening before a quadro is in place, consider carefully. Valuation dates or appraisals are months old, or no tax analysis accompanies major financial moves. All red flags.
Yeah, so if you see even one of those, stop. Every time when I say stop, I think of the fire commercial that you
Stop, drop, and roll.
Yeah. Stop, drop, and verify, I'll say.
I like that.
Divorce moves fast, in some cases, very slowly. But mistakes here can cost more than the marriage ever did.
Yeah.
So let's give you some action steps to take. Number one, insist on verified documentations. Don't rely on self-reporting. Number two, confirm whether proceeds are actually income or asset division. Number three, include tax estimates for every proposed withdrawal or sale, because that's a negotiation right there. Number four, agree on valuation dates in writing. Get a confirmation from everyone so that we're all on the same page. And number five, use your financial portrait to model cash flow before agreeing to any terms.
The investment is worth it. So financial truth isn't about who you trust. It's about what you can verify. Numbers tell the story when everyone uses the same data.
So true. So that's it for truth and timing and taxes when shortcuts backfire. If you've been told something that doesn't feel financially sound, it's okay to pause and question it. Actually, let me say not question it, but ask questions.
I love that. And I'm going to layer something in here. It doesn't mean it's an emergency. It just means you need to answer question and take the time it takes to be clear. Your future deserves verified facts, not verbal promises. Don't sign anything until you understand the tax, timing, and true cash flow impact.
And if this episode helped you see through some of the noise you're hearing, hit follow so you don't miss our next Divorce Explored. And share this episode with anyone making big financial decisions under pressure or not pressured. They'll thank you later. And don't forget to leave some comments for us or give us some topics or situations that you've been going through and we can discuss it.
Until then, here's to financial clarity today for confidence tomorrow.
Thanks for joining us on another episode of We Chat Divorce. We hope this episode was informative and supportive on your divorce journey. If you're looking for more support for navigating divorce with confidence and clarity, head over to mydivorcesolution.com for more podcast episodes, divorce events, and resources for your divorce. We'll see you back here for our next episode.